Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, guys. Welcome back to another live stream. Check out the new intro for 8cap. Kind of cool how that edit turned out. I like that new style that I got one of those handheld mic things, and they're pretty cool. They make for some nice content. Markets are absolutely going crazy here this morning. Let's talk a little bit about what we've got going on here. We'll jump right into things here. As we get started, if you could just do me a big favor, hit the thumbs up button, subscribe, do all the YouTube things. Helps to get the word out about our show here and keeps us on the air, continuing to do this each and every day. So stock market's lower today, and actually Nasdaq's down by pretty meaningful amount, down 3% today. And I know that there's a lot of selling going on specifically in the semiconductor world, which is certainly a change of pace. Semiconductors down 5.6% here today. Sharp drop off here. I'm not actually sure where exactly this is stemming from, although I do know EWY, this is South Korea. South Korea is seeing a sharp drop over 10%. I mean, 12% down here today. South Korea, of course, is big on the semiconductor trade and you know, all sorts of memory and stuff like that. So they're very exposed to that side of the market. So very sharp selling going on there. Let's just take a look around the room here at some of the big tech names really quick. Yeah, NVIDIA is down 2.6. You've got Meta down 0.95. AMD down 7% today. What about Intel? Intel's down 7% as well. So, you have some selling going on here in tech. 6.4% going on down on the SOXX. Again, NAS is pressing lower here. Very interesting. SpaceX. Let's take a look at SpaceX. Look at SpaceX, guys. So SpaceX has pretty much evaporated all of its gains since the initial IPO, or I guess initial IPO is redundant, but the IPO, right? Initial public offering. Huge pop, dropping back here, and just how quickly, you know, these things can rise. They can fall just as quick. The VIX is up 16% today. Gold is looking smooth here to the downside. We are continuing to see gold bears in control. Nick, check Gamma dealer flow. I don't personally use that, Ray Beast. Nasdaq has reverted back to the 200-day moving average on the 4-hour. Yeah, there you go. And I would say what's maybe more important, though, is the daily chart, right? Because the 200 on the daily is a very, very heavily watched level. And on the NASDAQ, right, you have a scenario in which you have a lot of room for this thing to pull back and still be in an uptrend. So if we're using the 200-day moving average as a longer-term indicator of strength, then the NASDAQ could continue to fall 12% further and still be in the realm of decency here. I mean, that's pretty aggressive. I mean, the NASDAQ has just had a really good run. And I've talked about how I think the NASDAQ may be due for a pullback, but if anything, I personally, I think it's a buyable dip if you continue to see the NASDAQ pull back here. That is my personal opinion, not financial advice. But I generally think the stock market is broadly set to continue its rally, but it's been due for a pullback. Like we saw a little bit of a correction here, but it was very brief. Buyer stepped right back in. I mean, if we come down here and take out these lows, guys, from a technical analyst perspective, that's going to look rough. Like that's going to look like, okay, then you may have some room to go back and test some larger critical levels. Like if we come down here, let's say, and we break through support, then you're probably looking at a retest to the 100 and 200-day moving average as very, very normal, right? That would feel bad in stock land. That won't feel nice, but in actuality, it would be very, very normal. And I don't think it would be, I don't think it would be mission critical by any means. Now, if you start to lose like the 200-day moving average, then I think things get really interesting. Like if that starts to happen, okay, now you're talking about like a larger correction, or even at that point, maybe you start getting into crash territory. If you start taking this level out, then you're looking at 25 plus, but we're not anywhere near there. So I think personally, the more likely scenario is that if this dips, the dip gets bought and we continue the broader rise. That's my most likely scenario when it comes to Nasdaq. My longs feel pretty short today. Yeah, anything on the long side today is not going to look good. Yeah, for stocks today, it's going to be likely a bloodbath. You get the Nasdaq, the index moving down 3%. It's not going to look pretty for a lot of individual stocks. We rattled off a couple already. I mean, if you're long, SpaceX is actually down only 1% today or 2%. It's down 2% today, but it was down 16.4% yesterday in a day. I mean, that's some violence. But more I'm talking about, if you get into, let's go, let's take a look at some of the big names. Apple's down a lot less today. Not so bad. Amazon, though. Look at Amazon. Amazon's been getting nailed here recently, and I own shares of Amazon, so I'm speaking from personal pain here. Nvidia, right? Down almost 3% today. There's one Palantir. Palantir's been getting hit. Look at Palantir getting nailed here. And this was like a couple, 12 months ago. This was like an undefeated stock. Lots of individual stocks taking some real hits here. And it's been interesting because, again, it's like if you're in tech stocks have still done phenomenal. We've talked at length on the channel about how the average stock is not necessarily doing as well, but tech stocks have been really just, putting the team on their back. COT data, Nick? Yeah, do we have COT data in today? Let's take a look. We do. COT data is up to date now within Edgefinder. Some dollar bullish here, ladies and gentlemen. Look at that. Dollar on top. Significant decrease in shorts, increase in longs. Let me just pause really quick for newer viewers or people who don't know what I'm looking at here. This is the latest commitment of traders report. It just filed in here this last night, and it is yesterday evening, as soon as the data came out, uploaded 10 minutes after or so. Anyways, latest COT data gives us an inside look at what institutions, hedge funds, banks, etc., are buying and selling. It is not my opinion of what they're buying or selling. It is not my subjective take on what institutions are buying and selling. It's not me trying to look at a candlestick and telling you what institutions are buying and selling. That stuff drives me crazy on YouTube. I love when people try and tell you what institutions are doing based on a candlestick formation, which is crazy. This is actually telling you what institutions bought and sold in the futures market through the non-commercial reported CFTC report. Check this out. The US dollar, the Dow Jones, the Nikkei, the South African Rand, the Russell, these things saw significant net bullish behavior. On the sell side, let's take a look here. They sold the Australian dollar, they sold the Kiwi dollar, they sold the British pound, US Treasuries, they sold the Nasdaq. They added significant shorts to Nasdaq, which is very interesting given today's action, right? You've seen Nasdaq get sold the hardest, and there's institutions getting sold or selling Nasdaq. Gold, they added longs and decreased shorts. So actually a bullish net move for gold. But I do want to mention something about the COT report that is very, very important that you understand this. COT data, they aren't They aren't like retail traders. They're not buying and selling 13 different times in the same day, right? They're usually longer term. And when we're looking at COT data, remember that it is the aggregated overall summary of what institutions are doing. And so it is important kind of to understand not just that the idea is like, okay, you have institutions buying and selling, but they move slowly and they move in aggregate. So this is lots of different positions. By the way, we are coming to the end of our VIP discount going on right now. If you want to see the trades that I'm taking, scan the QR code below my screen. Let us know you are watching the stream right now. We'll get you some discounts on Edge Finder, VIP, etc. That is coming to a close soon. So I'm just putting that up on the screen. So check this out. So the US dollar, look at this. This is like very, very decisive institutional accumulation of the US dollar. Like buyers, look at this clean yellow line uptrend. Like when you average this out, institutions have been buying the dollar persistently for some time now. Again, this is not me speculating. This is not me conjuring up in my head that institutions are buying the dollar. This is straight up from the CFTC Commitment of Traders report, shows institutional buying of the dollar consistently and persistently. I think this is like really big stuff that is so critical because, again, look at over here. You get these clean, kind of slow moving trends in the dollar, and it flipped at the end of 2025. The script flipped, and we watched this. And I mean, I'm currently long the dollar. I'm also short gold for this reason. The trend has been dollar accumulation from institutions. Is gold macro still bearish? I would say yes. We'll take a look at that in just a moment. But from the dollar perspective, again, this is why the dollar, I mean, this is not why the dollar is bullish, but it is worth observing that institutions have been persistently buying the dollar. And I make that claim, or I make that point, because this is not my claim. This is not my opinion. It's not a subjective take. It is from the CFTC's reported data. Institutions have been accumulating dollars, right? They've been bullish dollar contracts. So that is a huge, huge insight. When you have that data at your fingertips, you can look and say like, okay, why is the dollar driving higher? Well, there's macro reasons, but there's also institutions just piling money into it. So it's very interesting to keep an eye on this data. Is retail sentiment bearish for gold? We'll take a look at gold here in just a second, guys. I'm just finishing my thought on the dollar first. From a technical analysis perspective on the dollar index, and by the way, this has everything to do with gold, right? This is probably the core reason why gold is lower, is the strength in dollar, the hawkishness from the Fed, etc. But yeah, I think that dollar looks like it's driving on up to that 102 level. It still seems poised to go there. Little to no pullbacks here. It has been a straight moonshot here for the dollar in the last few days. And for now, seems no sign of stopping. At some point it will. But I think I'm not going to try and figure out when the dollar is going to cool off. I'm going to wait until the market tells me. And I think that if you're watching dollar, you know, you've broken this level. This looks really solid. I think you could pull back to this area. I would argue that probably looks more like a support level than anything else now, right? So we can add this support level. I think that if you're watching the dollar and you're bearish, this would be more of a sign of, okay, that looks good for dollar, like bears. If you actually see this pattern start to emerge, if you start to fail below. But right now, path of least resistance, in my personal opinion, is dollar continues on up. I think that most scenarios lead us back up to 102 for the time being. Now, again, if I'm wrong, then I'm wrong, right? I adjust. But my thesis is I think we most likely continued the trajectory. We have institutional buying going on in the dollar. We have a macro story that looks very solid for the dollar recently. We have a Federal Reserve monetary policy outlook that continues to generally look bullish for the dollar. We have a +10 reading on Edge Finder for dollar. I mean, all three of our categories technicals, commitment of traders, and fundamentals are all factored in as bullish catalysts for dollar right now. And that's been, I closed out of my, I don't know if I haven't said it on the stream today, but I closed out officially of my euro dollar shorts. I've had kind of some banger Forex trades recently. I closed out of euro dollar. There's about 375 pips on this one. And then pound dollar, I also closed out. So we are the dollar bullish stuff worked very, very well. And now I'm kind of looking for pullbacks. That's on the currency side. On the dollar side, I am still long the dollar index UUP within my ETF brokerage, but then I'm also still short gold, right? Gold is still working. And with gold, I have no target. I'm just letting this thing run. In fact, I am going to trail a stop loss today, though. This stop loss is ready to come in, I think. So what I'm going to do is I'm going to probably, we held this level very nicely. Stop loss is going to come in today. So I'll update that within the Discord. I will do that shortly. By the way, like I said, 40% off discount is ending soon on our VIP signals. If you want to get access to every trade that I'm taking, Forex, commodities, indices, stocks and options, we're sharing all sorts of trade alerts here within the group. If you're not in there, now is your chance to get in there for 40% off while the sale event lasts. Again, QR code is right below my screen, and the link is in the chat if you want to get information about joining us inside of the group. For gold, so what am I going to do with gold? Well, gold is flushing lower again today, though I am having a little FOMO. Look at silver. Silver looks even better than gold, down 5% today. Like, metals are a absolute bloodbath here in 2026. And I have to say, like, markets are just brutal, man. Like, every single one of us, myself included, like I have some really good trades on right now. I'm in a win streak right now. Things are going really well in my trading. But I know exactly what it feels like to be on the exact opposite of the spectrum, and everything you touch feels like it's not working. So I'm coming from a place of humility and experience when I say I know what it's like to be on the other side of this. But markets are brutal, man. Like, people in 2024, 2025, I had someone send me a direct message and they said, Nick, I made a killing trading gold and silver in 2024 and 2025. In 2026, I lost all of it. And do you have any guesses as to why that person lost all of it? Here's 2023 through 2025. Here's 2026. Do you see the difference? We as humans, I'm not pointing at this person and making fun of them. I'm not pointing at you and making fun of you. I'm not even pointing at myself and making, like, I mean, I guess I'm guilty of this too. We all do something called recency bias. We look at a chart that goes like this and we say, you only buy this chart. This chart only goes up. It is so easy. You buy every dip and it makes money, right? That's what we do as humans. That is wrong. That is dangerous, because recency bias gets you stuck into thinking that the way things have been are the way things will always be. It's so dangerous in trading, because if you traded like that and did phenomenal in 2023 through 2025, what people don't understand is there's an expression, everyone is a genius in a bull market, right? Everyone's a genius in a bull market, because it's hard to mess this up. If you just decided, yeah, I'm going to buy gold all the time, yeah, you're going to feel like a hero. You're going to feel like a legendary trader. Is anybody guilty of this in the chat? Anybody guilty of like getting comfortable trading gold in 2024, 2025? Gold is a temptress in this way. A lot of people love gold until gold changes up on them, right? Like, it's hard. I'm not trying to like call it, like, this is a safe space for traders, okay? We've all made mistakes. Everyone here has made mistakes. No one is exempt. Every single person listening, myself, we've all made mistakes in markets. We are all constantly learning. One thing that I found is really important. Macro, for me, not saying it's for everyone else, but macro connects all the dots for me. I have to say, I'm saying this, I'm not trying to sound like an arrogant dude, but we have flipped to the bearish side in 2026 after not having been bearish once during this whole time. We played the long side. In 2026, I flipped bearish on gold. I didn't do that because the price action looked like it was changing, because many times it looked like it was starting to change directions. I changed that because the macro layout, the macro landscape changed for gold. I made numerous videos about it. I've continuously made videos about it. Gold changed the start of 2026 when inflation was on the rise and jobs data started to tick up and show some strength. Now, I'm telling you that because if you know what to look for in macro, you can spot changing landscapes. Gold was an easy long. I know I'm speaking with hindsight. So like, I know somebody out there's rolling their eyes. They're like, yeah, obviously it was good to trade long on during that time. I promise I'm not trying to sound like full of hindsight. But this landscape had a very simple characteristic. Inflation down, interest rates down, jobs were hurting. Okay? That's picture perfect, sweet spot macro for gold. And again, I'm not trying to sound like I'm bragging, but Edgefinder played that perfectly. For numerous months, Edgefinders had gold reading, bullish, 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 bullish. Because this scenario is when, historically speaking, gold tends to do well. Fast forward to 2026. Again, I've made this video like 1,700 times this year, which is impossible because I haven't put out 1,700 videos. But you get my point. Like I've said many times this year, though, that changed. Inflation up. Interest rates up. Jobs up. Go figure. The chart, just like these factors all flipped, the chart flipped. And if you are only a technical analyst who has traded gold for the last 3 years in a uptrend perfect environment, then yeah, you're not crazy for experiencing a really tough change in 2026. And I've done this for a long time. I've been trading for 10 years. I've seen this story before, where the macro environment changed on me before I understood macro, and it totally crushed my gains. In 2022, I had a huge drawdown, even after being a profitable trader for years, because the macro environment shifted and I didn't properly adjust. And I bounced back. I did fine in the end. But I'm telling you that, like, from personal experience and mistakes, if you ignore the macro does not ignore you. The macro does not ignore you. You can ignore the macro if you want, but it does not ignore you. The chart dynamic is going to change, and it's going to bow down to what is king, which is fundamental analysis. That is what drives prices. If you ignore it, do so at your own risk. That's my take on it. That's my extremist fundamental analyst view. I think slowly, if you guys come back in 10 years, I think I'm going to just be like an extremist. I'm going to have like a shrine behind me to fundamental analysis, because every time I stray away from fundamental analysis, things go worse. Every time I focus more on it, things go better. Okay? So that is why I've dedicated my business. I know, yes, I have something to sell you, but I genuinely use it for myself. Like, I trade every single day with the help of Edgefinder, which is something that I have poured countless hours into investing everything that I know about fundamental analysis into a tool that helps us to track it. because it's hard to track. That's why most retail traders do not use it. It's hard to do. Having the right tools to monitor it makes a big difference. Now, again, I'm not guaranteeing you or promising you anything with fundamental analysis going to magically make you profitable. But I greatly think that it has made a substantial difference for myself and many others. And with a lot of hard work and effort and the right tools, you can jumpstart that fundamental analysis process. If you want to implement it into your trading, the easiest way, in my personal view, to do so is to start reading along with what EdgeFinder is showing you here in its scorecards, in its data graphs, etc. We track all the data, we deliver it to make it easy for users to better study fundamentals. If you're interested in getting a copy of EdgeFinder, QR code right below. Again, don't waste time. Stop getting blindsided by macro regime shifts. This is a big boy, big girls game. Trading is not it's not walking into the casino and making a bunch of money. The real world trades based on macro fundamentals. The right tools can monitor that for you. So with oil prices, don't you think maybe inflation will be going down in 2 or 3 months? Yes, I do. I do think that inflation, this will help with the inflation story, but there is something to note here. Inflation was on the rise before the war. Inflation and oil prices were also on the rise before the war, months in advance. So we back as far as December of 2025, oil prices bottomed, started making a move higher. Obviously, the war really threw that out. But I personally don't see oil likely just dropping through the floor. And if that does happen, then you've got real problems, because then you've got like, oh, the economies of the world are falling apart. That's what that would signal in my view. But and then in case you would have no worries about inflation, because you wouldn't be worried about inflation. You'd be worried about jobs and growth, right? That's arguably just as bad, if not maybe worse, if no one has, because then what happens is central banks start to print money to try and save the day. So now you have inflation and recession. That is the worst case scenario. So when it comes to oil, do I think it will cool inflation expectations? I do think so. But then the question is, inflation is hard. Once it's out of the box, it's hard to contain. So the bigger question is not, will this help with inflation? That's pretty much expected. Everyone expects that. The question is inflation, how sticky is the inflation that's working its way through the system right now? Like, for example, COVID and the Russia-Ukraine stuff, these events take place, and then inflation, we work through it over periods of time. Like the inflation we worked off from COVID and Russia-Ukraine, it was like a multi-year campaign to get rid of it. So it's not enough like, yes, okay, oil comes down, great. It's not like that simple to just say, and now inflation is completely gone, right? Inflation, supply constraints, et cetera, they can take time to get stuff back to normal. We are now questioning how much time, right? That's one of the big inflation questions. Tech stocks continue to be in bear land today, which is a rare sighting. I'm watching this level on Nasdaq. I am bullish on the indices, so I'm going to watch how. Well, I was. Let's take a look. What's going on with NAS? Institutions did some selling on NAS. Interesting. I think Dow may still. Yeah, Dow's maybe the one I'd potentially play. Dow Jones on a relative strength basis also looks good today. It's down only 0.5%, where Nasdaq's down 3%. What about S&P? S&P chart looks kind of rough here. S&P +5. What's going on with the UK 100 stock market? Getting a +11. Very interesting. What's going on with the pound today? I know they had a prime minister step down here. Pound dollar's back lower. I was hoping for a larger bounce here because I do want to sell pound dollar again. Same with euro dollar, but this one I took profits, and of course it's continued through that level of support. Somebody asked me in the chat, last thing I'll say, and then I got to throw the show over to Mr. James Lane. Someone in my chat yesterday, they asked, Nick, do you ever take profits before it hits your take profit level? Because with currencies, I actually use a take profit level or a target level? And I just wanted to answer that question. I did answer it in Discord, but the answer is no because of this. So I had a take profit not get hit and it bounced, right? But I've traded for so long at this point that when this happens, like my position sizing, first of all, is small enough that I don't care. I'm like, whatever, just continue. Is this annoying when this happens? Absolutely. But I shrug it off because it's just going to happen and I can't control when it's going to happen. But the answer is, do I ever take profits sooner than my take profit level? No. Otherwise, I would have put my take profit at a different spot, right? If my target is here, my target is here. And ultimately, it did come back down and close out here. So I did fine with the overall position. But it's also not impossible that this happens and then we go all the way back. It actually looked like that's what was going to happen with my pound dollar trade before it closed out. I had taken my first half off here, and then we went all the way back up just to break even. And then we flooded lower and took the second target off, right? So like I said, my let me see if I can show you that. Here's here's the pound dollar trade, right? So I shorted, kind of went back and forth, dropped, took my first one off, and then it bounced. And I'm sitting there like, oh shoot, well, maybe the other one goes back and hits my stop. And then it just flooded lower and came to my second level. I think oftentimes in trading, the best solution, at least in my experience and in my strategy, is to do nothing and just let time play out. Doesn't mean you're always going to be right. Sometimes you are going to have this thing disappoint you. You can't change the inevitable with just the random distribution of how your trades are going to go. You're going to have some pain, some heartbreakers. You're going to have some really awesome turnarounds. Like, you're also going to have situations where it looks like it's going to hit your stop. You don't touch it, and then it comes all the way and hits your target. Random distribution of outcomes is a real thing in trading. Even if you're profitable overall, you're going to have like really stupid looking trades in between. Anyways, like I said, last call on this. If you're interested in getting access to our VIP signals, scan the QR code below my camera there to get access to that. If you message in, you can set up a payment plan if that is something that you need access to. Some people are choosing to go for the lifetime option, but splitting it up into 2 payments or 3 payments. That is something that my team can set up for you if you are interested in doing so. Dark Age says he's always right. Very nice. Send me your email so that I can hit you up because I'm tired of taking losing trades. Up next, just after this quick break, we have James Lane coming in, talking trading setups and ideas. Do not go anywhere. The show only gets better from here. Check it out. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Tuesday, ladies and gentlemen. Hope everyone is well. Just move my camera. There we go. I managed to get it fixed. Yesterday we had some technical difficulties. That's a bit frustrating. Anyway, yes, I hope you're all doing well. WDSKN4609 says, guys, I'm down 1K USD today. Do you think I should leave the chart, go out or try and recover? Well, I think quitting is for losers. So go all in. Of course, I'm joking. Of course, do not do that. It depends, really. I mean, when you say get it back or try to get it back, obviously don't ever revenge trade. Don't ever go back into the market specifically to get money back. That never works. But if you're, day trading, scalping, and there's a normal setup, I think it's okay to take. The real caveat, though, is how much is $1,000 to you? Some people, that's like 0.5% risk, so it's no big deal. Some people, that's the whole account, so it's 100% blowout. So it really depends. However, typically on a serious note, I would say step away, go outside, get some fresh air, and we've still got a couple of days left in the week. You've got time, so the markets aren't going anywhere. Ray Beast, hello. SK, hello. Sluggy, hello. Hope everyone's well. It's good to see you all here. Recover tomorrow, not today. Exactly. Yes. Oh, you guys are looking at the Nikkei? I'm looking at the Nikkei as well. We can go over that in a second. 3 losses a day keeps the drawdown away. If that's how you want to go about it, that's fair enough. I'm leaving and coming back tomorrow. That's the best decision you can make. Very mature and yeah, best thing you could do. Okay, so open positions. Euro dollar is still running. It's pretty much all I've got going right now. So yeah, we moved stops to break even this morning. I would like to trail a little bit more to this H4 high. The problem is, well, actually, sorry, not the problem. It's not a problem. But what I am a little bit cautious of is trailing too aggressively, because we've just broken 1.14, which is a major level of support here on Eurodollar. You know, we've got a low over here, failed breakout over here. So it's quite a strong level on the daily. It wouldn't surprise me if we come back up, retest this level here, and then run lower from that point. So I'm more playing the long game here. So I'm looking really on the weekly and the daily timeframes for areas to move stops. So there is an argument here that the current weekly candle is broken below the previous weekly candle. We could trail it to the top of this week's candle. Maybe, and maybe that's something to consider. But the sort of thing I'm thinking about there is just the aggressive move we've had down recently. Are we going to get a bit of a correction, a bit of a deeper correction? Possibly. Of course, you know, I could sit here and give you all of these different ideas and what could happen. Maybe this could happen, so on and so on. That's not very helpful. So for now, trailing quite conservatively. So the scaling position here has got a very tiny bit of profit locked in, and the initial position here is completely break even. So I would really like to take it down to 1.12. So if we go back to the weekly time frame, 1.12 is a really nice level here. So obviously we've got previous support, then turned resistance over here, and since then has just acted as a pretty nice level to come down to. So I would expect another retest of 1.2 eventually. Seasonality is also quite nicely on our side as well on Eurodollar, which is not something I pay too much attention to, but it is there. We did get COT data as well, actually, which we can take a look at. So I'm not sure what the Edge Finder has got. So yeah, not Eurodollar, sorry, the US dollar saw inflows. I was telling you this last week that I would expect the US dollar to have inflows due to the Fed pivot. Well, not Fed pivot, but the hawkishness we had from the Fed last week. Euro doesn't seem to be on here unless I'm blind. Oh, it does. Yeah, Euro's here, but it's not really doing anything overly interesting. So in terms of just isolating the euro dollar, I think we're still completely fine. The COT aspect to stay there. Euro dollar is also still the most bearish setup here as well. Actually, side by side really with New Zealand US dollar. So I think we're pretty much safe really to stay long dollar on a fundamental side, of course. So if we're talking about the dollar, we need to talk about the DXY. So we very clearly and very decisively broke above this sort of 100 to 105 to sort of 101 area resistance. Again, it sort of dependent on how you draw it, but we've broken above, which is really nice, but we're not completely out of the woods because we are approaching this previous top. And this is exactly where we broke out last time and failed. The dynamic has changed. Obviously, we do have very good US data at the moment. We do have that hawkish Fed. So I'm not really expecting this to be a double top and then we come all the way back down, but it could be more of a situation we sort of come up, retest this high, pull back, retest the previous highs here, it's like, you know, break and retest, and then a continuation from that point. That's something that could happen. So I'm a little bit cautious, again, with sort of the trailing stops and being too aggressive and getting taken out on just noise rather than a fundamental shift. So yeah, that's that. Anyway, the Nikkei that we were talking about, I'm looking to get in pretty soon. I don't have really a hard entry. I was considering a pending order over the weekend. However, I think I'm really just going to wait because we are seeing quite strong movements to the downside or quite strong momentum to the downside, which I don't really want to buy into too aggressively. So I'd rather wait for the market to come back down into this gap, which would also meet the 50% retracement level, show some sign of slowdown, whether it's just an H1 or H4 bullish candle, just something to show me buyers are back in the market. Then we could look to be buyers from this point. So the downside of this trade, I suppose, is the Edge Finder doesn't really have much. I'm fairly sure the Nikkei is just 3, if I remember correctly. Yes. So yeah, the Nikkei's got a score of 3. So it's bullish, but it's really not great. You know, it's not a case where we've got some overwhelming factors. And actually the bullish factors we do have for the way I trade and what I like to look at, it's really not that significant. Technicals bullish. Yes, obviously we've got a bullish trend. Institutional is bullish. But then economic growth is neutral. Inflation is very bearish and jobs is bullish. So 2 out of the 3 pillars that I like to look at when it's economics, inflation, and jobs market, 2 of them are not with the trade. Does that make sense? So it's not ideal. However, again, if we just look at this market, even from just a trend following strategy without the fundamentals, I still think it's worth taking an attempt. Not financial advice, of course. So I am happy to take the trade, but it probably won't be my normal risk. I'd rather go in with a little bit less risk on the initial entry, and then I can always scale in as the trend and as the market proves itself to be working. I think that's probably the best way. Let me catch up on what's been said here. It seems like a busy chat today. Is it one of your best trades? How do you usually get these huge R&R trades? I don't. So euro dollar isn't a typical trade. I'm not going to sit here and say, you know, I get these trades every week, because I don't. That's just a lie. No one does. The reason euro dollar worked out the way it did is because it's one of the markets I really pay attention to. I love euro dollar, especially going short, because it's a negative swap market. So it's just something I just always have really enjoyed trading euro dollar. So as weird as it may sound, I've got kind of a feel for the technical developments that it makes and sort of the setups. So the initial entry I took wasn't good actually by any means. So I did the normal setup, you know, or the normal entry I do, which is fib from the high to the low, look to the left. Do we have structure? Yes, we did. So I took an entry here and it ended up in drawdown. But then what I saw is the 200 moving average acting kind of as a dynamic resistance here. Not totally, but we double topped as well. So there was some signs here that we were topping out. The edge finder was bearish. And we had FOMC coming. And at the time, I was saying that I didn't think the Fed could really be dovish. I didn't expect them to be as hawkish as they were. But I was still bullish on the dollar, regardless. And I did think the Fed would at least assist that, which has happened, obviously. So it's more a case of combining the edge finder, some context behind the edge finder's data with central bank, which in this case is the Fed, and just basic technical analysis and letting the trade run. And that's really it. It's pretty straightforward when you lay it out sort of like that. Hi everyone, new here. Question: it seems that the edge finder tool could be a great resource for swing traders, however not so much for short time frame scalping. Is this a fair assumption? It depends. So you can use it for scalping. You know, it can be a good for your biases. So for example, if you're let's say a futures trader, you trade NQ, ES, MYM or YM and all these different like sort of indexes, then it can be good to help you with the bias. So in this case, you know, the fundamentals are there to the long side. So maybe you want to go into today with a bullish bias. That's kind of surface level. Then they've got, or they used to, geopolitical risk tracker is what I was looking for. So you can sort of just track the risk and sort of the sentiment behind the markets. Obviously, you can look for positioning. So it's more longer term based things, but they can all help you build a bias. So it really depends on exactly how you trade small time frames, to be honest with you. If you're like in and out within a couple of minutes, then probably not. But you know, if you're more of a buy on like the 5-minute, hold for the next hour or something, maybe it could be a bit more useful in that case. My model is doing DCA on the Nikkei. Very nice. I like that idea. Risking a small amount really makes you profitable in the long run. Now I see how important risk management is. And if I stop trade, if you take max risk of 3 to 4% a week is great for your psychology. Yeah. I mean, I'm a little bit concerned that you said risking a small amount and making 3 to 4% a week in the same sentence, but I think I get what you're saying. GPAUD. Yes, actually, I forgot to say my pound Australian trade was stopped out this morning. So this was the trade which I trailed the stop loss to just above this H4 high, and it just had a complete reversal overnight. You know, I was sleeping, woke up, and it was basically my stop. So I was what can you do? It is what it is. I think the trade was okay. However, last week, pound Australian temporarily turned bullish on the edge finder. So I definitely wasn't with the fundamental trend here. I was more trading my personal bias on the pound, which is short, and also the swap market, or the swap rate here as well, which is quite nice to the downside. But yeah, in terms of actually getting a trade on the pound Aussie, I don't have one, to be honest. I've got no real bias at the moment because we're not doing anything. So if we actually just remove all of this for now, we're just stuck kind of sideways. There's not really a directional move at the moment. Yes, we're in a downtrend if we use the moving averages. However, right now, I can't justify doing anything. So I'm kind of just sat out. But yeah, we can maybe take a look at that later on. To get historical data for my backtest model, it's so expensive. No, it's not, surely. I've got 5 years worth of high, low, open, close data for everything, or well, not everything, but all of the FX market, or major FX markets, indices, and major commodities like gold, silver, copper, platinum. I think it's like $80 a month through one of the data companies. Actually, it might be a little bit more, maybe $100, but still, it's not too bad, especially if you only need it for 1 month just to backtest something or whatever it is. Actually, sorry, that was probably quite rude. I said it's not expensive. Obviously, it depends on your personal situation, but I think for the grand scheme of things, maybe not so much. Of course, time on the chart time on the chart helps and other things, but if you are risking big in hopes to get money, you will lose money. Yeah, typically so. Simo, I'm good, my friend. How are you doing? Cut reports, a lot of accumulation on the Nikkei. Is that so? I didn't actually look when we last saw. Let's go to the history actually and see Nikkei here. Yeah, actually, you are right. It's a large change here of 8%. Although previously a negative 14.5% reduction is quite large, but yes, pretty nice, I suppose. So we've gone from obviously 6.6 to 7. So it's okay. Not really. Is bias either you are scalping or doing swing trade? It helps with bias. Yes. Cycling Club, good to see you. Swiss yen shorts. Interesting. Do we have anything for Swiss yen shorts? Let's see. Let's pull back the trusty edge finder. No, there is no reading for Swiss yen, bullish or bearish. So it kind of makes me a little bit cautious on that. Do we have anything to pay attention to here? So monthly time frame, extremely bullish. I wouldn't really want to short that. Weekly time frame, very bullish. Daily, yeah, to be honest, shorting it seems very difficult. So we're coming into quite a strong level of support here. Higher time frames are bullish, and there is no real driver for Swiss yen to be bearish right now. Max, you love Swiss yen short. Why is that? I don't see anything, but maybe I'm missing something that you've seen. So pound dollar shorts, I really like. I think Nick spoke about pound dollar shorts. It didn't quite get to my entry, so I wanted to get short on the fib retracement. Obviously, high to low measure this leg. I wanted to see a pullback in between the 50% and the 61.8% into previous structure that would provide the break and retest into the fib, and then a continuation lower. We barely missed. Well, I say barely. It's obviously a little bit of a larger distance, but still, it could have been there, but the stars didn't align, unfortunately. Dollar CAD's continuing to run higher with no pullbacks. There's nothing to do there. Australian dollar, US dollar didn't give me another didn't give me another entry opportunity. So again, sat on the sidelines, and gold has run off without me, unfortunately. So yeah, there's that. So we do have the FTSE, which I think we looked at yesterday. It's the most bullish reading on the edge finder with a score of 11. I hate it. I really do not like the FTSE at all. I think long positions make sense, well, kind of. Obviously, we've got the fundamentals there that are reflected on the edge finder. Technically, we draw the fib from the high to the in this case, the low to the high. We did have the pullback into the 50% retracement. That looks okay. But as we spoke about yesterday, it's one of these markets that's just very tricky to trade. It's a bit like pound Swiss, I think, is a good sort of equivalent. So while we can get really nice trends, typically it's just very choppy. And for a trader like me that follows trends and waits for pullbacks, this type of environment is just, it's a death trap. You can't do anything with it. So I'd rather stay away from it, to be honest, rather than try to trade it. I kind of like the immediate setup right here, but given the context that we're still in this range, I really can't justify it. There is also speculation at the moment that we are going to see the Bank of England pivot a bit more dovish. So there is ideas really that we could see the not the S&P, the UK 100 or the FTSE climb higher over time. But yeah, again, I'd rather just stay away for now. James, for me, is data costing $1,000. How so, Ray? What are you trying to get? Just for price action data or candle data? That is absolutely outrageous. You're getting ripped off if that's the case. So I have unlimited API calls per month. I have 800 calls per minute is a limit. But that also gives me all of the data I want. So fundamental data, technical data, high, low, open, close, etc. It's all $100 a month, I think, maybe less actually. So if you're paying $1,000, I think someone's having you on a little bit. Holding since 202, but Swiss might push soon, as any time could bring US dollar pullback. Yes. So I would expect the dollar to pull back at some point. It is looking a little bit overbought technically. That doesn't mean I'm expecting a reversal. Pullback and reversal are very different things. So as I said earlier, I think my base case right now is we actually continue higher towards 102. We reached the previous high to the left over here. And then we have a little bit of a retracement and then a continuation to the upside from there. So something like this. Maybe deeper, maybe we come back and retest these previous highs on the left and something along that. Either way, I think we're really in one of those situations where the market is super clear. And as Nick was saying, I don't want to sit here either and pretend like I know everything or I can see the future or I don't take losses. Obviously, that's not the case. But you will find in the markets there are these times where there is something really clear. Like earlier this year, it was the Australian dollar. Right now, it's the US dollar. And of course, I'm saying this right now. Next week, we could have a complete reversal and I sound like an idiot in hindsight. But at the moment, as things stand, the dollar has broken out, or at least looking like it really does want to break out, especially from that previous high. The fundamentals are bullish. The Fed is more hawkish. We've already priced in. Actually, let me double check what this number is. Markets have priced in 42 basis points of tightening through Q2. What else was there? Was something else actually. That wasn't what I wanted to read. Oh, there we go. Fed now fully pricing sorry, I can't get my words out. Sorry. Fed now fully pricing 125 basis point hike by December 2026. So, I think dollar longs are kind of just the simplest way to go. God, it sounded really illiterate then. Any thoughts on New Zealand CAD? Looking to buy at my zone, took 2R from Australian dollar Swiss after we touched that yesterday here. What was that? New Zealand CAD. I'll be honest, I'm not seeing anything on New Zealand CAD fundamentally and technically. We were in a decent bullish trend here. It wasn't good enough for me because the moving averages were a little bit too choppy. So yeah, at one point we were maybe looking a little bit more bullish, but we've broken these lows. Technically we've got high, lower lows, lower low. So short positions make sense. But again, it's kind of just an ugly market. So to get a real sort of technical entry or a technical read is a little bit tricky. Then we look again at these fundamentals. I don't think there is anything. Oh, actually, sorry, I'm lying. I've lied to you. New Zealand CAD is bearish with a score of -5. So in that case, if we're going to keep it really simple and sweet, if we're following the edge finder and we want to go short, fib from the high to wherever the low is going to be printed or wherever it is printed. So let's say here, for example, I would just be looking for a pullback towards the 50% to 61.8%, retest the previous low over to the left, and then the continuation lower. I think that might be the best approach. But again, for me, I don't want to trade that. It's a little bit too choppy. To be frank, this position is a hedge about that because all the other yen are costly to hold. I see, Max. Right. Okay. So I see. Okay. Right. I get what you're saying. Yeah. So like dollar yen, Aussie yen, etc. You don't want to hold short because they're expensive on the swaps, whereas Swiss yen, not so much. I get it. Is it possible intervention might get us wicked out? On what? I assume you mean dollar yen. Are you long dollar yen? Maybe. The problem is I don't know when that's coming. You know, I could sit here and say I think the MOF is going to intervene tonight or next week or in 1 month. Any of them could be right, but I've got no idea which one. And that's really the pain and the difficulty of trying to discuss interventions, because we can fully expect something. Sorry, we've got builders outside. I hope you guys can't hear that. We could fully expect like a pullback towards a 200 moving average, like what we saw over here and over here. That could be quite a nice buying opportunity. But again, when is this going to happen? It could be something like this, where we trend even higher towards 170. Who knows? Oh, short Swiss yen. If you're short Swiss yen, an intervention would be good for you because that would obviously make the yen stronger. If you're short Swiss yen, that's good. You want the yen stronger. So yeah, you I think be fine. Obviously, it depends on the severity of it and how quickly it gets eaten up. New Zealand dollar weakness is also being clear this month. Yes, you are right, actually. I've not really traded the New Zealand dollar. It's not a focus of mine, really. But you are correct. I think New Zealand shorts have been quite a good call as well. New Zealand dollar, unfortunately, I missed that one. But I think when it comes to dollar pairs, gold, New Zealand dollar, Australian dollar, euro dollar, pound dollar, it's really, all the eggs in the same basket, really. I think euro dollar is kind of the better one because you get the swaps and obviously the correlation or the inverse correlation of the dollar and the euro. But even so, I think pound dollar is absolutely fantastic. So yeah, we'll keep it simple today. Are they building the villa or what? I don't know what they're doing. So I'm currently building a catio for my cats. And I think the neighbors are building like a pool house or something. I don't know what's going on. It's an absolute nightmare. Here's me trying to do a live stream for you beautiful people. And we've got builds out there making a ruckus. It's absolutely unacceptable. Anyway, we'll move on. Only issue is Swiss yen will be the less mover as US dollar rejection will meet. Yes. Okay. I think we said that before, Max, but yeah, I would agree. How do we get to know on which we get positive swap? Okay. As you see on my cam, you can see Edge Finder code ELITE. If you put that in to the Edge Finder checkout, you get a really nice discount, and it does help me out. I do these streams for you. Just, little kickback for me. It is appreciated if you could use my code. So what we want to do, macro scanners, we go to carry trade scanner, and here we see the interest rates of base and quote currencies. So let's say, it's a shame we can't do multi-pair, actually. That would be something. So if we go Euro USD, I'm going to go out there and have a fight with the builder in a minute. So Euro dollar, I should say the ECB interest rate 2.15, Fed's interest rate 3.75. So we've got an interest rate divergence of 1.6, and the carry trade direction is sell. The Edge Finder makes it super simple for us. So yeah, that's all you need to do. Get the Edge Finder, carry trade scanner, look for the market. And my camera's bugging out again. What you want to do is make sure that you're not going heavily long or heavily short on a market that is against you in swaps. So pound Swiss is a good one. I was rambling on about pound Swiss a few weeks ago. This one is pretty expensive to hold short positions on. So maybe just take that into consideration. How do you get swap-free accounts? Sounds super shady. I don't think it's shady. I think it's for religious reasons. I think there are certain religions that don't allow interest. I think is it the Muslim religion? Maybe a couple of others. I don't really know. I'm not a religious person, so correct me if I'm wrong. But I think it's done for religious reasons. So you can apply for swap-free accounts to negate the interest rate or the interest fees or whatever. According to SMBC, Nikko, what Japan and the US have agreed on is currency intervention to prevent the spillover to the US bonds. Maybe actually I haven't I haven't heard of that, but yeah, I will need to look into that. Maybe I'm really out of the loop there. Anyway, ladies and gentlemen, I need to head off. I'm just need to see who's on after me so I can throw it over professionally and nicely. So we've got Marco coming on after me. Don't go anywhere. Marco is a great trader. You're in great hands with him. Guys, stay safe. Don't get margin called. I'll see you all tomorrow. Thank you for being here. Enjoy the rest of your days.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello. Welcome everyone to my segment. So the stock market has opened and I am getting smoked. So I have 3 positions open at the moment. These are all forward testing positions, so very small size, just testing out the new breakout strategy. But I have Caterpillar, which is still running in profit. I have GFS, which is now at break even, I believe. Yeah, I'm gonna have to check on my broker. And I have MCHP, which gapped lower like crazy. So I'll take a bigger loss than initially planned on this one. But that's why a good rule to have when trading stocks is so lower the risk by 2 times. Essentially, if you want to risk 1%, it's much better to risk 0.5, and then you can account for gaps, right? So in this example right here, MCHP, my initial stop loss was at 9957. Well, the market opened much lower. So I'll actually take a bigger loss than expected, but because I'm risking a very small position, it is to account for these types of events. So it is to account for gaps. As far as the regular markets go, so USD JPY is still sitting right at my entry level, but I still like this trade. So if we go to breaking news, we're still getting some chatter about a possible intervention. So I think we saw something here. Yeah, suspected JPY intervention. That was last week on Friday. This week we got some chatter yesterday. So I think if we go to the 1 minute, we saw this move right here. This move happened on, yeah, this move happened as well. So you're getting a little bit of pressure and you're hitting a massive level of resistance, which is this previous high in 2024, right before. So right before you got a big drop, you got a big intervention right there. And that is something I'm betting on to happen this time as well. Not essentially a complete downtrend like this. So not a massive downtrend that lasts for days, but just an initial sell-off and that I can take profit. So an initial large red candle like this, and then I can just take profit, close the position and be done with it, or maybe execute another one if this happens. So let's say we get a drop, price goes up, we go back to the level, and then they strike again. So something like what happened in on the 30th of April. That's something I'm looking for. Indices are getting smoked. So today is not a good day for the stock market. I don't know exactly why the sell-off is happening. I'm guessing it's mostly profit taking. So yeah, on the Nasdaq now below the 20 MA, Nikkei just about to hit the 20 MA, big red candle. I would of course prefer a bullish reading on the edge finder to try and take a stab long. So right now it's neutral, which doesn't really work for me. What about the Nasdaq? Neutral as well. So not really the greatest story for me. I would love to get an edge finder bullish reading, and then I would try to take an initial stab long. Now, the USD JPY position was a signal in the A1 Discord, so I just want to remind you, if you want to get all of my trades, you have Nick, Iwind, the Yen Man, you have Chris Pulver, Alan, and a bunch of other successful traders. Max is one, he's in the chat. So they're all in the A1 Discord. Personally, I think it's the best Discord that you can find in this retail space, because 95% of the stuff you can see in this space is fake. Just like everything on the internet, most of it is fake. So the link is in the description, and you can use the code Marco to get 25% off. So I'm looking forward to working with you if you want to join the Discord. But in terms of the regularly scheduled program, I have only 3 things on the list. So I have only 3 things. Looking to add some things definitely this week. I think the positioning for the dollar longs is getting extreme. The VIX is okay. The VIX is going up. For the dollar, the positioning is getting very, very extreme, I would say. And fading this dollar strength could be an interesting place. So I read the newsletter from Brent Donnelly yesterday, and the positioning is definitely max bullish or close to max bullish long. We are now overextended from the 20 MA. I believe a brief pullback could happen. It does work well with my USD JPY short, so that is a short that I definitely want to have on. And then we can look at, for example, Euro dollar, which has been massively oversold, I would say, or GU, just for a bit of a bounce. I'm not calling for an uptrend on EU or on GU. I'm calling for more of a bounce from this area, okay? So something like this. Just to kind of reset the sentiment, to reset the positioning, and to bring us back to some more fair levels. I actually flipped my mind, and I don't think selling GU is the right way to go at the moment. So my favorite position was selling GU. I did bank nice profit on that, as you can see with these 2 positions. But I want to be patient from now on, or maybe even catch a small buy position. Yeah, maybe even catch a small buy position on GU, right? So let me just see. I just want to take a look at my positions, because on my brokers, the market has opened. I think it opens 5 minutes after the actual open. So let's go to my personal. On the personal, yeah, I got stopped out of MCHP. There was a big gap lower, damn. And I'm still running the CAT position, and I'm still running GFS. But I should move the stop loss of CAT to break even. And also on the Darwinex, let's take a look at that. Well, that didn't work out so well. Yeah, same thing. CAT is still running. Okay, it'll be fine. It'll be fine. Questions or comments? Let's take a look. Marco, Nigeria loves you. Thank you very much. So thank you very much for your comment. Simo, hello. Please let us know how you select your stocks. I'll definitely talk more about it after I do most of the forward testing. I don't want to waste a lot of time if it's not going to work, or if I'm not going to like it, or if the results will be kind of bad. So it's a basic breakout strategy. Like, the best resource is this guy. This is even better than what I can tell you. So Kuala Magi. It's not Quagmire, it's Kuala Magi. He's from Sweden, and he has 3 timeless setups that have made me tens of millions. He was in the recent Market Wizards book. That's how I found out about him. But basically, in this page, everything is explained. So I'm using just the breakout strategy. Okay. And by the way, a great combination to have with this strategy is the stock box, because with the stock box, you actually have heat maps. If you go to the technical screener, you go to heat maps, and you go to, for example, the monthly heat maps, you'll find the best performers, and you can just put those into TradingView and see if the setup is forming. Because for this breakout strategy, you do actually need to find stocks that have made 30% or more in the last 3 months, let's say. That's a good criteria. So Edge Finder heat maps can definitely help with that. And then once you find the stock that you like, you can add an extra confluence if you just put it through the stock scorecard. So if you're looking at Intel, let's say, INTC, currently score of 4. So it's neutral. So that would be kind of not a reason to take it. Maybe a reason to be more patient on Intel. So the stock box, I think, works great in addition to this breakout strategy. And if you do want to get the stock box, it will be in the description. And you can also use the code Marco to get 25% off. He also has 2 more strategies. So he has breakouts is the first one and the easiest one. Then the second one is episodic pivot. And then you also have the parabolic short. Those 2 are kind of more tough. I'm personally focusing just on breakouts for the first month to see how I'm doing and to see if I like it or not. And I'm always looking to add new stuff to my trading, expand my trading, get into some new assets. I think this is actually pretty simple. What you do need is you need an overall uptrend on the indices. So that is key. The Nasdaq and the S&P, they must be above the 200 EMA for these strategies to work. And they must be overall in an uptrend. So the 10 EMA and the 20 EMA have to be sort of pointing up, which right now they're not. Okay, they are pointing up, but starting to curve lower. So that's starting to become problematic. The best market condition would be this right here. This is where the millions are made. And then this is where the millions are lost if you're a stock trader. And this is, again, where you can lose a bunch of money if you're not careful. But this is another good market condition. So this strategy really likes a trending overall stock market. And it's another tool in your toolbox that you can have. So I'm doing mostly currencies, then I'm trading gold, oil, not so much, but indices sometimes. For example, I like the Nikkei, and crypto as well. I did put on some Bitcoin positions, which most of them lost. So I'm not a good Bitcoin trader, but that's fine. It may start working in the future. And now on top of all of that, I'm adding some stock trading. It's just let's say 1 hour of work extra per day, and definitely worth it. So Aussie Yen has been great today. Now we just need the intervention. Cycling Club, welcome. I'm doing pretty well. Shout out to Marco. Thank you, Max. Red Summer about end of quarter rebalancing, basically taking profits. Maybe that's just it. Yeah, could be it. And also there's a seasonality pattern where the dollar actually rallies into the month's end. So it's a known pattern. That's why any of the short positions on the dollar that I'm looking to take, quick short positions, they may be better to do after June ends. So beginning of May, because if you look at seasonality, you would notice that end of month is usually bullish for the US dollar. I think like 55% of the time, the dollar goes up at the end of the month, last 2 or 3 business days. And one of the catalysts for that is massive companies like Apple, Facebook, Microsoft, Tesla, pretty much any big US company that's doing business across the world, they get foreign currency. And then usually at the end of the month, they exchange the foreign currency into US dollars. So they need to buy US dollars. And that is why this phenomenon happens. Marco, any thoughts on GPNZD? We can take a look. Is it profitable? If you're thinking about the stock strategy, yes, absolutely. Any strategy can be profitable in the right hands. That's something I've learned after, I don't know, being in the markets since 2021. Anything can be profitable. I've seen a lot of stuff. I've read about a lot of stuff. It's all about what you like. It's all about what you are good at. So if you can find what you like, if you can find what you're good at, what sort of clicks with you, that'll make money for you. And yes, I know I'm very negative towards purely technical analysis, but there are traders out there who use purely technical analysis. I have to note, they do know a lot about fundamentals and they do know a lot about central banks and how the markets work in general, but for their decision making, they solely use technical analysis. So it could be done. It can be done. What's your thoughts on the Nikkei? How are you looking to enter the next bull run? Simple strategy. Could you please tell me? So GPNZD was the request. Let's take a look. GPNZD. This one, it looks fine. It's starting to become bullish, although I wouldn't really bet long on the British pound. I still think their long-term economic data is not so great. So here, 0.6, but all of the previous prints were very, very low. And then you look at things like the unemployment rate for the GBP, 4.9%, but overall it is rising. So I would say economic data is still on a bad path in the UK. That's why I wouldn't really bet long-term bullish on the pound. Let me run it through the top setups page. GBPNZD. Bullish, okay. So that's good. That's good to have. New Zealand dollar is the same, or the New Zealand economy is the same. Weak numbers, I think bad GDP trend, unemployment is rising. So both of these are not such strong currencies at the moment. I would rather find that one strong currency, which right now is the dollar, but I think that could pivot pretty soon. It all depends if you're looking for short-term opportunities or long-term opportunities. Right now, short-term, I would rather, let's say, buy GU, buy euro dollar at these levels of support rather than buy GBPNZD. And then long-term, I don't know, do we have any currency long-term that is considered bullish? Maybe the Aussie? Possibly. So yeah, possibly the Aussie. But it's still, the dollar is still beating the Aussie. So we're going to have to wait and see what happens. I do want to mention the sponsor of today's video before I forget. So if you're looking to get funded, Ola Prime, we have a 35% discount code for you. So if you use the code A1 Live, you can get 35% off any Ola Prime challenge. Now the link is in the description of the live stream. Ola Prime is actually an emerging prop firm, but they have a really good trust pilot. So 4.6 is the score. I would say that is really, really high as far as prop firms go. They are reviewed by Deloitte, which is an added plus. I know it sometimes sounds like bullshit, but this is actually a plus in my opinion. And we have traders in the A1 Discord who have gotten steady payouts with Ola Prime. So, and one more thing, they don't have the consistency rule. Depending on the account type, they don't have that consistency rule, which is one of the biggest issues for swing traders. So I would say this could be a direct competitor with FTMO, but with our discount code, it's much, much cheaper. So it's a much better price. A1 Live, 35% off. Definitely do take a look. There was a question about the Nikkei. Yeah. So when talking about the Nikkei, I know I do have it on the watch list. Just remove the 10 EMA. I do have it on the watch list, although I don't have a bullish reading on the Edge Finder, which is an issue. And right now, the price action does look like a falling knife. So it looks like a huge red candle on the daily chart, which it is. And this could easily, the US markets have just opened, okay? So this could easily drop down even more, right? So first, I would definitely need to see a bit of a rejection there. Second, I would definitely prefer to get a bullish print right here. That's something that I'm waiting for as far as the Nikkei goes. Same thing on the Nasdaq, although the Nasdaq is now below the 20 MA. So that is a problem. That is an issue. Yeah, indices right now, I'm gonna have to wait for the edge finder print. I can't do much before this turns bullish. It's part of my trade plan. Yes, of course, I can take a position even though if there's a neutral print here, but I would need to have some really, really high confidence, and I would need to have a really high level of conviction to go in, even though if there's a neutral reading on the edge finder. In my personal experience, the edge finder has a really, really high win rate. So it works on currencies, of course, but on indices and gold, it works really well. So like the success rate is really high. That's why I depend on the edge finder even more when we're looking at assets that have a positive skew. And if you don't know, a positive skew means that the asset is going up over time. Okay. Marco, I think anything short NZD is going to be great. Okay, well, I think the New Zealand dollar is definitely a weak currency, yes, and the New Zealand economy is weak. It all depends what do you want to pair the New Zealand dollar with. That is the question. So NZD/USD definitely crushing lower, yeah. But again, positioning is getting extreme on that dollar long, on the dollar long position. Hello, Sluggy, welcome. GBP/NZD has been a loss. Well, I'm sorry to hear that. Gold, why gold sudden bullish? Let's see. Gold bullish. Personally, I'm not bullish. I did have a position on which I got stopped out way back. So I took a long on the 15th of May, got stopped out on the 10th of June. I'm not looking to re-enter. Personally, this could be a good bottom for gold. That is true. I do agree with that. But I'm not sure what would be the catalyst to push it higher, because so far, gold has been acting as a risk on asset. But the problem is it has been selling off in sympathy with the S&P, but it hasn't been rallying when the S&P rallies. So that's a problem, right? If you look at the S&P, the S&P has had some good days after the 1st of March. So let me just see. Well, some are here. So we have had a pretty good time or a pretty good period for the S&P, while gold, since the start of the Iran drama, I think this was it. So 2nd, 3rd of March, we just sold off aggressively and we never really recovered. So that's a problem. I'm not really seeing any bullish patterns or any bullish prints in the price action. So USD/JPY we covered. I'm actually considering adding to this position, maybe adding a bit higher. I really like it. You know, the more I see prints about a possible intervention, suspected JPY intervention, the more I see that, the more I'm interested in this position. So if I can increase the exposure, that wouldn't be such a bad way to go on USD/JPY. Again, not financial advice, but I am liking this position. The problem is the swaps, absolutely. So the swaps are high. The swaps are expensive depending on your broker. Could be very expensive if you're using a scam retail broker. So be careful with that. But this is a play for an intervention and for the extreme dollar long positioning. So you're kind of secured both ways on that front. That's why I like this position the most. I think the yen could benefit in the upcoming few weeks, especially if the risk off continues, which we're getting today. We're getting actually quite significant risk off, it should be beneficial for the yen. So the yen is slightly up on the day, should be more beneficial. I'm not really seeing the reaction that I'm expecting, but that's fine. Oil is going back down to previous levels. So personally, this is strange because we're getting the MOU that's going to last for 60 days. Nothing is yet concrete. The Strait of Hormuz, apparently it's open. Apparently ships are passing through. I don't know, but it all seems very uncertain still. The markets decided that it's time for that to be over. So the markets just sold off oil. Inflation is expected to go back to previous levels or close to previous levels, which could mean that the Fed may not need to hike as much. So we could get another repricing Fed watch tool. So we could get another repricing of Fed hikes. If you look at the Fed watch tool, we have one hike priced in for 2026. I think this could go back to neutral. So I think this could go back to the same rate, or if the next two inflation prints go down, I think we could even have a cut this year. Okay, it's not off the table. Everything is very, very volatile. Everything is very fluid at the moment. So if most of the inflation was caused by the Strait of Hormuz, was caused by the high prices of oil, if you look at the inflation CPI, USD, 4.2%, and rising. If you look at the PPI, 6.5 and rising. So if most of this was caused by the Middle East and the price of oil, this should go back down to at least 3%, and if you have been following the Fed, 3% is the new 2%. And if you watched the speech from Kevin Warsh last week, he mentioned he only cares about the 2. So when looking at inflation, he cares about the 2. He doesn't really care about what it says after the 2. So if it says a 9 or a 7 or a 2 or a 3 or a 6 or a 4, he doesn't really care. He only cares that it starts with a 2, which could mean that they just need to bring it in around 3%, right? I would say all of that right now could be more dovish than people are expecting. And I know it complicates things very much because last week we were talking about a super hawkish Fed. The dollar was exploding up, but we have new events. So we had a repricing, I would say. We have some new events in the markets. I'm long gold. Okay, well, good luck with that. Sluggy is DCAing into Nikkei. Okay, that's gonna be interesting. I would be in there with you with small risk, but I'm gonna wait for an edge finder bullish print. Maybe just in the 1 hour 15 minutes for gold, but we'll wait until Thursday. We have PCE. One thing about the PCE, I don't think it's gonna mean much. So if we open up the calendar right here, core PCE price index for the United States. But this is old data. This happened before the opening of the strait, before oil went back to previous levels, before the war, pre-war levels, before we had this massive meltdown lower. That's why this is a lagging print. Now, the markets may initially have a reaction, but I think a net result of this print won't be a big reaction. So we need to get some new inflation stats. We need to get some inflation stats that were measured after oil dropped back down near the pre-war levels. That is going to be interesting. Not the current PCE print, but maybe the upcoming CPI, the upcoming PPI as well. That should be a bit more clear for us. Yeah, the last 2 times Edgefinder was on my side, this time printing a neutral bullish meh reading. Okay, I'm not very confident, but my position size was kind of low. Playing position size on my SL is very wide, so I don't mind. Okay, that's fine as long as you're sticking to the plan. So good luck with the position. I think this is a good level. Also, just be careful that you're not catching a falling knife. So alongside of a bullish print from the Edgefinder, I would also like to see a bit of a rejection here as well, something like this candle or this candle. So what I really don't like is falling knives like this. like we had, I think we had one on the Nas, if I'm not mistaken. I would say this was a falling knife. We definitely had one on gold. So yeah, this one, take a look at that, or this one, or this one. Those are just massive red candles on the daily chart. Anyway, I have reached the end of my segment. Do not go anywhere because you have Tiger coming in 30 seconds. So you're in good hands. I wish you good luck in the markets. We will see what happens in this week. And I'm looking to get into some short-term tactical USD shorts. So yeah, if you're in the A1 Discord, you'll get notified. Thank you and goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Yeah, ladies and gents. I'm back to turning cartwheels today. I spent the day yesterday chugging Pepto-Bismol to get over the bug or whatever the hell I had. I don't know what the hell I had. My sister had it too, so I don't know. It must have been something we all ate as a group the other day. But anyway, I'm back. So let me know what your tickers are, and we'll dig into things today. So thoughts on the Swissy? Is that old news? Oh, that's brand new. Okay. Yeah, Swiss franc. Yeah, dollar Swissy, euro Swissy. Yeah, we'll check that out. Give me 2 seconds here. First thing I wanted to say, guys, when it comes to Ola Prime, of course, you've got the A1 Live code up there. Just make sure and put that in the second box, the second code box, if you are interested. 35% off account of your choice. Got the QR code as well. But one thing that I did notice Ola Prime just updated was if you go onto their website, their main website here, and you go into their trading rules under the plans tab, they have actually simplified things a little bit, because one of the big confusions that I've noticed in prop accounts, getting a prop account, is separating the challenge rules with your funded rules. Okay. So you got the challenge account, you got your targets, you got to meet your, max loss, inactivity, all that stuff. But what Ola Prime has done is actually separated it to where now they also show the Ola Prime account rules, which of course is the funded account once you pass the challenges. So they just made it a little more intuitive. And this is a big help, because I got to be honest with you guys, even when I worked with Ola Prime and I was working on their Discord and helping people with the trading rules, even I was getting confused at times. Okay, which one of these is the challenge account rule and which one of these is the funded Ola Prime account rule? Okay, so they actually did that, and they did that based off of whatever trading account you're after. So it's a really cool addition that they've made, and then they still have all the prohibited trading practices and all that other fun stuff down here. So give it a look if you guys were ever confused about that, because I know that was probably half the questions that we would get on the Discord when I was working with them was, okay, does this count for the challenge account or does this count for the funded account? So it's a really cool feature they have done to make it more intuitive for you guys. So give it a check out. And yeah, as always, let me know if you have any thoughts, questions on that. At Trade Like a Tiger on all the socials. Okay. So let's take a start. Let's take a look from the top. We have got some data, some UK data that came out this morning, some Euro data. The Euro data looked okay, except for the German number there. The French numbers looked good, but not the flash services number for the Euro. So that was the lone blemish. The British pound just did not have a great morning. Hour and a half after the London Open. Okay, 3:30 my time, so 2 a.m. my time here in Kansas City. But they have come down a little bit from their high point. I don't know if the algorithm has got it updated just yet over here. Let's go have a look. British pound. Yeah. So we still got to get a little changes on here. It'll be updated for you guys at some point. Hopefully here pretty soon. We're going to see some boxes turn red. So that's going to be basically 2 blue boxes to 3 red ones. So what is that percentage? It's 40%. Okay, remember the neutral ones cancel out because that's expectations met. So very quickly, it looks to me like the pound's going to go from 80% down to 40%. Okay, so not as strong as it was while we were all sleeping here in the States. Okay, so that is one thing of note. Obviously, the Keir Starmer drama, the 6 prime ministers not even being able to complete a full term in the last decade. It's a pretty sad situation. Actually, James did a really good video on that, guys. If you go look up James on his YouTube page, he did kind of a little overview of the situation, I think just a day and a half ago. So go check him out. I think it's James LNE, if you go look him up over there. But really cool stuff. So yeah, that's a look at the UK. We did have some other data that came out for the dollar as well, more of the middle impact stuff or medium impact, where I guess I need to refresh my chart, don't I? Where we did have a good manufacturing number and a little bit, just barely positive on the services side. It wasn't positive enough to turn it green, but we already had a couple green boxes, I do believe, for the US dollar prior to that anyway. For the PMI data, there you go. So I don't know. That may actually change to neutral. I'm not sure exactly what this means. It should mean that. Yeah, usually if it doesn't go green or red, it's just neutral. So it was technically a beat. It was just a very small beat. So we'll keep an eye on that. But nevertheless, dollar's still looking pretty strong, especially when you add in the sentiment, the technicals, the seasonality as well. The dollar is just looking pretty good. It's looking pretty strong. Oh, wait, actually, wait a minute. Oh, never mind. I just totally lied to you on the seasonality. I forgot. This is not a good month for the dollar overall. And they do that, guys, based off of the last 10-year average. Let me just refresh that. Last 10 years average, obviously for the month of June, since we are in the month of June. On average, is it bullish or is it bearish? Okay, so yeah, it's actually getting a negative number on that. So change on that. But still, it's still one of the stronger items that we have on the list. The UK, the FTSE, it was giving us an 11 score. Again, that PMI data has dropped it somewhat. But it's all about the dollar strength overall. And the Dow, I think, is my favorite because, and we lost Bitcoin. Bitcoin's down to neutral. So the Dow was the biggest winner on the most recent COT report. I do believe that was the case, or was it the US dollar? Let's go over here to it was the biggest winner on the indices. So yeah, the dollar was the biggest winner. Guys, remember we had a holiday here in the States on Friday, so the COT wasn't released until yesterday after the bell instead of Friday. So it's just a little bit older of a data, but at the end of the day, the dollar was the big winner from the previous reporting, and the Dow was the strongest asset other than the dollar. So there you go. The Nikkei, interestingly, was one of the biggest losers last week. I think it was down to the tune of minus 10, minus 12%, something like that. And just like that, they flipped bullish. The big banks and institutions at almost 8.5%. So that's your biggest winners. Biggest losers are the Oceania, New Zealand dollar, the Aussie dollar, minus 6.5, minus 6.8% there. And yeah, that was really the biggest extremes. Pound minus 2.37%. Not a big wonder considering all the drama we've been getting lately with the British pound. So where are we at? We got dollar Swiss as a request, I noticed, and Euro Swiss. So let's take a look at those for you. Not on the bullish bearish list, so they are pretty well neutral when it comes to the edge finder, but let's have a look at the technicals anyway. Start with the daily on the right. Higher highs, higher lows. We have broken through a supply zone, a daily supply zone, and it looks like we are pretty close to trying to close above it, which would show some strength somewhere in the origin of this, overall strong move. Now, this is old news down here. This is a demand zone that's already gotten touched and bounced from. I'm talking about the daily. So I'm just going to color that light yellow. And where is our strength? So it looks like we had a rebasing here. Rally, base, rally. This is obviously our base. This gives us our brand new daily demand zone. Let's get that drawn up for you and colored my normal lovely yellow color. So definitely want to see if we have any strength somewhere in there. A little higher, you can see I did draw this supply, this demand here, but very weak volume. So I think this is probably a no-go for me. It's a strong gap. And I think I drew that on a 6 hour. Now that I think about it, 6H. Let's draw a 6H up. Yeah, here we go. So that was 6 hour I drew up. But yeah, still no volume. The volume on this leg out down here, this little green box or this little green candle, that's not very attractive. I don't like it. I don't like it at all. We got to go down a little deeper, see if we find some strength. Now, this 6 hour candle was pretty strong. So let's go back down to a 4 hour. And let's see what we got. Looks like this 4 hour candle was the last candle before that red volume spread analysis bar. Talking about the big, strong gap out. You guys can see that from a mile away. It gave us a really good gap, did it not? This is a very nice looking inefficiency in the market where demand exceeded supply so fast or so hard that it pushed us clear up. And then the candles rebased and didn't retest it. That's strong. Okay. So that's a very strong look. Now, I would be looking at this confluence, assuming, or, you know, if we were to get a bullish bias on the edge finder, which I think the last time we had a reading was a bearish one, wasn't it? On dollar Swiss. I feel like it was, or I thought it was. Dollar Swiss. Okay, so +2. So yeah, we're good on the sentiment side of things, clearly, because the dollar we just saw was the leader of the last COT report. Technicals looking all right, but it's the fundamentals are just hanging us up just a little bit. So pretty well neutral. But if we get anything change, then yeah, that demand I just drew up would be a great one. And you asked about Euro Swiss as well. If I can get my charts to work, come on. Euro Swiss -2. So very bearish fundamentals. But we're just getting a mixed picture with the sentiment and the technicals. So let's go have a look at it. Euro Swiss, Euro Swiss, Euro Swiss. I mean, overall on the daily, it is a series of higher highs and higher lows. It is, and just like I said, okay, it gave us a technical score of +1. So bullish. We broke through this overhead supply. We worked through it. On a daily, we didn't close above it, but on a 4 hour, we did. And that's good enough for me. Okay. So if anything, it's looking bullish, but the fundamentals just aren't agreeing with us right now. Just aren't agreeing. Let's go have a look at the fundamental score of these two currencies. Euro, 50%. Swiss franc, 71. So, I mean, it makes sense why we would want to sell because, again, the Swiss franc fundamentals are doing the best. But we just need things to turn around. Okay, we need, if this is giving us bearish vibes on the fundamentals, which is the why, which is the whole reason to get into a trade, then we just need trend to turn around. And currently, it's up, right? This supply zone was not enough strength, didn't have enough unfilled order strength in it to turn things around. So I think the bottom line is, I got to see at minimum a break of this structure right here to the downside and just get a new series of, again, lower lows and lower highs. So perhaps something like this. Break. Yeah, something like this. Oops. So what we do, turn that red, and then perhaps somewhere in this area, we could find a new supply zone. That's the way I would treat it for a possible short, because we got to break and close below this structure first. That would be a change of character. The technical term is change of character to the downside. It's a break of structure, but it's a change of character. It's going against the grain of the higher high, higher low series or sequence. So that's the way I look at it. I would say this is definitely a major support because, again, this support, this origin of this strong move up had strength to break and close above a supply zone confluence. So there's no denying that there's some strength somewhere in here. So if we're to get back in line with the fundamentals, we got to have a break of structure to the downside. So no trade on either one of the Swiss pairs you mentioned for me personally until we get some more information. La, da, 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 da. Yeah, what do you guys think about those other bouts of intervention that we had yesterday? Talking about the Japanese yen, talking about trying to flirt with 1986. I know I've been talking about it quite a bit lately. Going back to our 1 minute chart and having a look at yesterday. And you can see I circled the RSI candles that got a really big spike on this candle here and this candle here, which was pretty weak relative to this one, but we still got a range on a 1 minute candle of 64 pips. That's big range for a 1 minute candle. And it didn't stick though, because it closed at 38 pips. So within that 1 minute candle, we dropped 64 pips. And then we bounced back to the upside, almost 30 pips. And then the whole carousel continued. And then I don't know, you can make an argument this might have been another tiny intervention candle right here. That's why I circled it, because it just looks a little suspicious to me. Is this finally going to be the intervention that sticks? I don't know. So far, it's just kind of hanging out in the middle. Just continue going forward. We're basically right in the middle of that 64 range candle. And again, we got within we got within like 2 pips yesterday of 1986 prices. 92.6. Anything over 95 is 1986 territory. So 3.6, 4.6. So another 2.5 pips, and you're bouncing in. I already made this case, guys. I already mentioned this. I don't want to beat a dead horse, but again, just going back to that waterfall down we had in the year 85, you might have a little resistance right here from this monthly candle. But if you break that, look at that. You don't really have another major supply zone until you get up to the 236 area. I don't think the Bank of Japan wants prices going anywhere in this territory if they're trying to increase the value of the yen relative to the dollar, especially with the strong fundamentals that the yen is seeing. Remember, it's beating expectations on most everything. So, interesting spot. I don't think I'd want to be Governor Ueda and whoever's making the decisions over in Japan, because that's some pretty hostile territory that we're seeing. Again, we've chewed through that daily supply I told you guys about, and we're real close to chewing through the weekly by 2.4 pips. Okay, so it's going to be interesting, but nothing has changed. I'm still bullish on this item. Obviously, we are getting a bullish reading on dollar yen. The hard data is just telling us stick with the dollar, despite the yen being strong. See, that's kind of the outlier, because you've got 2 strong currencies going on right now. So that's where the fight is. That's where the fight's going on. But nevertheless, I'm currently sticking with this 4-hour zone of demand down here, down basically at the start of the weekly. Now that I know we've pierced the daily, okay, that makes it okay for me to at least take a small stab at this demand zone down here. Okay. Now, I don't want it to just come straight down. I would like it to come down. It can come down strong to a point, but at some point I'd like to see it kind of manipulate a little bit, start getting that volume, the liquidity sweeps and so forth, so that we could take a stab at it like this. Get a little bit of a sideways basing action somewhere in here. Start breaking the highs, start breaking the lows, testing the liquidity, and then just drop into one more time to take this liquidity and the unfilled orders for a buy to the long side. So that continues to be what I'm looking for on dollar yen. But it's more of a reality TV show right now. It's just going to be interesting to see what the Bank of Japan does. Pretty fascinating stuff, if you ask me. What else we got? Anything else, guys? I do have about 10 minutes. So if you guys have any other tickers you'd like me to jump on, let's have a look at them. Let's just go have a look at some of these dollar pairs where the dollar is the quote currency, because Aussie was the biggest loser. We just saw that. Aussie and New Zealand. The dollar was the biggest winner. So if we're just looking at a COT report, if we're just looking at the smart money, well, this Aussie dollar is going to be one that sticks out the most. It's also giving us a bearish signal. Okay, -9. Pound dollar -8. Kiwi and euro dollars -10. But yeah, the COT report's definitely saying, look at Aussie dollars. So we are currently in this demand zone confluence. Yeah, and this is just a spooky area to me, guys. Because I do believe that's a weekly down there, isn't it? Yeah. Weekly time frame. We got a weekly demand right here, guys. Right? Weekly demand. That's not the greatest volume. So I don't know. Maybe the under part of that weekly might get chewed up pretty quick. But let's go to the daily. Now we're talking about this candle. Okay, leg out candle. The volume is increasing, but it's still not like super strong. Talking about the VSA, the volume spread analysis activity. The tick volume, guys. It had a nice push up, but yeah, again, did effort match result? I say that all the time, guys. It really didn't. It really didn't. Now let's have a final look at the 4 hours, since that's this green candle. Let's go see what the 4 hour candle gives us. All right, so we start getting some yellow candles here, but it's still not like great. Those are yellow candles, yes, but look at the size of them also. There's two ways to look at VSA. Number one, what's the colors? But number two, even if you have a yellow candle, is it really that big? I would make the argument it's pretty close. If I had a bullish reason to buy Aussie dollar, I would definitely take a stab at it. But if we're looking on it from the flip side and saying, reset, hey, do I want to take an opportunity to short up here? I think we're still good. I mean, at the end of the day, we've tested liquidity under here. We're obviously testing liquidity of all three time frames of demand zone. So I, for a while, was interested in this little dinky 4 hour supply zone because there's no denying the volume coming out of this on this leg out candle. Big yellow candle. See the difference? So for a while, I was kind of interested to see what would happen if we bounce in here. But now that it's bounced into the confluence underneath, this is a big X for me right now. Okay, big X. I'm going to wait for a retracement up to my original supply, 71.30. So perhaps this is enough unfilled orders from the demand side to push price back up to the supply side for shorts. Okay, so that's what I'm looking for. And then I would use that very same demand zone, even though it's been mitigated, for my take profit. So that would be the play at this point, and we're going to say that with this one. Okay, so that's what I'm looking for on Aussie dollar, which again, and it may not get up there, guys. I mean, we're at 9. What are we at? 932. I'm asking it to go 100 pips. So it's got to retrace 100 pips. It may or may not. The ATR is 54 pips a day, so that would probably, under normal circumstances, take at least 2 days just to get up there. But perhaps the unfilled order, the unfilled orders from the confluence down here, perhaps that could shorten the time. Perhaps that would be enough strength to get us up there in a day. I don't know. No idea, guys. No, I have no idea where prices are going. Good traders will tell you that. We don't know. But all we know is we have a plan for wherever they go. So that would be my plan right there. Okay. So that's Aussie dollar. Euro dollar, pound dollar look a little better because we haven't bounced into anything major underneath. In fact, euro dollar and pound dollar, we've chewed through a demand zone. So unlike Aussie dollar, where I just showed you guys I'd probably ignore that middle supply zone, euro dollar and pound dollar are different because we chewed through the demand zone. So that's why I've actually moved my alert down here to 115.13, is because of that. Because this was the last point of consolidation before we chewed through this demand. Okay, remember, zones that take out or structures that take out other structures or zones usually means there's a lot of money involved doing that. It takes a lot of money to break support and resistance, supply and demand. Okay. So that'll be stab number one. If it fails, got another confluence up top that's probably a little stronger. But we're far enough away now from this supply zone to where I think that's a pretty healthy pullback. Okay. I think that's a pretty, oops, didn't mean to do all that. Pretty healthy pullback. So there we go. Why does that keep doing that? I'm trying to have it stop. Come on. There we go. It wasn't working with me. But anyway, that's euro dollar. Pound dollar again is going to be similar because we've broken through a demand zone as well. So I've got my alert there at 133. We'll just call it 133 flat, ladies and gents. Former support over here going right through the proximal line of that supply zone. I really like that area. The volume could be better, but at least it is growing. Again, this would be a partial position, just like the euro dollar. Okay, because the volume picture wasn't the greatest. But like I mentioned yesterday at the very end of the show, it still was the last point of no return before breaking a structure, before breaking demand. So by definition, there's got to be some kind of strength in there just to be able to break through this demand. So that's the only reason I'm paying attention to this. If this hadn't have broken through a zone, I'd be waiting for the retracement all the way to the top. But I don't want to ignore that, especially when we got former supports kind of going, well, in this case, just a little lower than the proximal line of the supply zone. In the pound dollar, it's right on the proximal line like we just saw, okay? So that's why I'm keeping an eye on these levels. I want to see what happens. We'll see what happens when we get there. All right, I got a couple minutes left. Kiwi dollar was also weak. Or I should say, well, it's weak, but the Kiwi was also sold off by the banks. So we broke structure very similar to pound and euro dollars, pound dollar, euro dollar pairs. So keeping an eye right here, 58.11. Consolidation. Unlike pound dollar and euro dollar, this leg out candle gave us a really nice volume bar. So I really like this one a lot. Because again, over here, effort matched result, unlike the pound and euro dollar. So I've got three scenarios where this took out demand. Which one do you think I would probably prefer to take? Whichever one had effort match result. That's going to be the euro, Kiwi dollar. So that's really the play for me, guys. We went through the majors. We went through dollar Swiss. It's neutral. Dollar CAD's not really on the list at the moment, but it's strong as strong gets. However, dollar CAD is bouncing into this daily supply. So it's got to give me some more information here, guys, because this supply zone over here, which I don't think I drew that. Oh, yeah, that's the way I meant to draw it. Had a pretty good drop, 3-day drop, pretty good volume. I have to respect this daily supply. That's currently where we're chewing into. Okay. So no play at all. I do have an alert there, yes. But now that we've kind of bounced into this, that I could reevaluate the things, because this, after all, is a kind of a narrow, a skinny demand zone, guys, and it's on a smaller time frame, 1 hour time frame. Yeah. Now the reason I was watching this is because, remember, that was the rate decision. I think that was. Is that right? Yeah, the rate decision where we had 2 hours of very, very strong volume. So I do want to respect it still. This would be a very strict confirmation entry and probably even partial position as well. So Kiwi dollar is probably my number one short. Pound and euro dollar is right behind it. I know we're just about out of time here. Let's look at gold, silver. I know you guys ask about that a lot. Still bearish, just not as bearish. Okay, I think we did lose a point or two on the bearish bias side of things. We are currently on the pound, on the gold, bouncing into that demand. So again, guys, I talked about this a time or two last week. I was waiting on the supply zone a little higher. I didn't get it. Okay, the bottom zone I drew up actually caught the ask and pushed the price down. So at this point, it is now a take profit. So just need more information now. Okay, or I'll still be interested in this supply if it bounces up. Because again, at this point, it's a long ways away. So that would be a pretty good, healthy retracement, if you ask me. Talking about the red projection line there. At that point, we would finally bounce into the 4-hour 200 EMA on the way up. Okay, so I would love to see that. Start bringing in some of these EMA traders on a higher, on a higher EMA, and that would be a pretty picture right there. At this point, I'm fine with the demand zone having the unfilled order potential to push price up to my supply to short it. That's if that happens. But if we get a break of structure, well, then we'll look through for a new supply zone somewhere in this area possibly. And who knows, this right here could be it. The volume's not the greatest on the leg out. Maybe not. Maybe not. Let's go to a 2 hour. Yeah, it's just not great volume, guys. Effort didn't match result on these leg out candles. You had a yellow candle here, but just like I said closer to the outset, yellow candle, but it still wasn't very big. Just wasn't a lot of activity. We're talking about trading gold late at night here in the States. It is a popular asset to trade over in Asia, but again, it's just not a zone that was created during the New York session. Preferably the London-New York overlap, guys. That's really, I think, the sweet spot. You guys have probably seen that all over trading books and things, webinars, things of that nature. Yeah, that's one thing I think they've got going. That's just where the most successful zones are created. Okay? For me, it's about 7 to 10, or for New York, about 8 to 12, somewhere in that area. Okay, so that's where I prefer my zones. This one isn't there, so we're probably just going to have to skip it for that reason. But ladies and gents, holy cow, we're out of time. Silver's the same picture. We're bouncing and trying to chew through a zone. Got to see a break of structure retest for a possible short. Only over here, look at this. 4 hour candle, leg out, bigger yellow candle. So this might be a play, but we got to continue to close to the bottom side and see what we got after that. So we'll look at this a little more tomorrow to see if this could possibly be a little retracement in a little bit closer of an area. But that's, again, only if we get this break and close like this. Otherwise, we wait for the retracement all the way to the top. Ladies and gents, that's about all I got for the day. I think I'm the last one. Yeah, I'm the last one today. So definitely trade safe out there. And, yeah, I'm going to go turn some more cartwheels. Talk to you guys tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.